Okay, we are here with Owen Lamont, and today we're going to talk about the 7 pillars of market bubbles. And this is Owen's first time on the show. He is the Senior Vice President and Portfolio Manager at Acadian Asset Management, a Boston-based global investment management firm founded in 1986, specializes in quantitative and systematic investment strategies. Owen, thank you so much for joining us. Are you in Boston right now?
I am.
All right.
Great to be here.
All right. Very cool. So I really liked what you had written because I don't currently view the entire market as being in a bubble, but there are undeniable bubble elements everywhere you look. I think before we go into the 7 pillars, I think just broadly speaking, the only trouble I have with full-blown this is a bubble diagnosis, full stop, is that the term bubble implies that people are making money primarily in either low quality or Ponzi-esque types of investments. And while those are everywhere, the bulk of the gains for investors in this era have been through arguably the most high-quality companies that have ever existed. Are they paying up for them? Totally. But are they tulips? Not really. So I just wanted to get kind of your overarching take, and then I want to dive into what you wrote.
So I totally agree that it is not obvious that like the S&P 500 is in a bubble. I think it's closer than it was 6 months ago.
Agreed.
And there are some items on my checklist that I'm checking off, but I would not say that it is in a bubble today. And the main thing that might make me change my mind is if in 2025 there's like a huge wave of IPOs, like we saw in 99 or 2021, that would be a signal to me. Just hasn't happened yet. So totally agree that the broad stock market it looks pricey, but it's not obviously a bubble.
Yeah. So to me, it feels like we're on our way to a full-blown bubble.
And there's a lot of things that would take a fork in the road. Yeah. But like we're going off every checklist, boom, boom, boom.
I totally agree. And I had this conversation with Jason Zweig just a month and a half ago. And I said, we're not quite in madness. We're in the foothills of madness.
We're in the foothills of madness. Exactly right. And we can see the distant peak of utter insanity. It's the mists are clearing.
All right, let's go through 1 through 7. Number 1, I'm going to quote you, and then I want you to react to it. You said, there are idiots. Look around. This, of course, is apocryphally something that Larry Summers wrote in an unpublished paper. It sounds like you got a chance to look at it. It's such a, I don't know if it was his opening line, the way you talk about Call Me Ishmael from Moby Dick. It sounds like it would be a great opening line. What was Larry saying, and what are the relevant aspects to this concept for today?
Okay, so first of all, I have never seen it.
Okay,
but it's not apocryphal. There are many witnesses who have read it.
People have. It's apocryphal to me.
It's like a forbidden scroll that you will never see.
Okay,
it might be possible. But anyway, there are idiots. Look around. I think the relevance of that is when we think about bubbles in the stock market, they're partly rational and partly irrational. And I would say that in the world of Bitcoin, there are irrational and rational people interacting. So nobody disagrees. There are idiots, or we could just say irrational or uninformed traders who are gambling. And no one disagrees that those people exist. The question is whether they impact the stock market or impact Bitcoin or whatever.
Yeah.
So there's been decades of research trying to plot out how rational and irrational people interact. But to me, when I think about Bitcoin, I do think about a bunch of new people flowing in who definitely do not understand monetary economics, don't really understand finance at all, and they're just buying the Bitcoin ETF because they're part of a movement. It's part of something cool. It's part of something lucrative, and an interesting a quote that I didn't include was George Soros's famous quote, "When I see a bubble, I rush in. This is not irrational." So that there are other people, I don't know, they're front running the idiots or what they're doing, but it's a complicated situation with different types of actors making different types. Everyone's trying to outwit everybody else.
So this is what I wanted to ask you. Yeah. There's an element to this. There's a cynicism, and I'm not sure if it's generational
Yes.
or if it's pros versus retail.
Yes.
But it's like, well, I know there's this army of morons that's going to keep buying. Therefore, why would I sell? And so you have rational people deliberately, possibly acting irrationally, making the bet that there are even more irrational people right behind them.
Yes.
That's what's at the heart of the Soros quote. And I think, if anything, all of society has grown increasingly cynical. They turned politics into a game show. Why wouldn't we treat markets like, on its face, the only use for it is greater fool?
Yeah. I mean, it's always been true that there's been this, what Keynes called the beauty contest, the animal spirits, that we're all trying to front
Judging
run
the
each other.
judges.
But
right.
It seems like you're old enough to remember the tech stock bubble. There was a lot of that in the tech stock bubble, but at least there was like a core of a good idea, which was there was this internet thing, as opposed to many of the cryptocurrencies where it's everyone knows it's crazy, and they're just they're just part of the game. They're just playing to outwit the other guy, and it's a timeless thing. But just like you say, it seems worse, and I totally agree. It's part of our culture of meaninglessness, or just like I don't know what you want to call it, but it's
call
just
it
more of the same.
They call it financial economic nihilism.
Yes, I think that's the phrase of Matt Levine, and that's definitely the meme stocks. That's what the meme stocks and many of the cryptocurrencies have in common. Like they stop pretending that there's an economic reason for it.
Yeah, so I think there's an element of that, and then to your point, I think there are players who genuinely hold these kind of crypto libertarian views about the financial system, and they believe in what they're building and what they're doing and the purpose of all of this, and they're willing to tolerate the carnival sideshow that's taking place in the tent next door, because in their way of thinking, and you wrote about this, yes, there are idiots, but they don't matter because they cancel each other out.
Right.
So if you're the CEO of Coinbase, you can't get rid of the idiots, and maybe you make some money because they exist, but you're not really focused on that. You're focused on building the Charles Schwab of the crypto era, and you're a true believer.
Right. And in the defense of the crypto boosters, every great, economic transformation has had nonsense and stupid people and crazy stuff. So, railroads and those were all good things that, help society. So I can see where they're coming from.
Yeah.
But like you can't really say that about the meme stocks and stuff. That's just like pure nonsense. And it seems related, and it seems like it might be kind of intersecting, especially the cult-like aspects of it.
Yeah. So let's say there's $4 trillion ish in crypto, most of it Bitcoin and Bitcoin related securities. I know there's some overlap there, but let's just say that's like that universe of speculation. Then let's say the meme stocks are another, I don't know, do they add up to
tiny?
It's at 5 billion still, with GameStop being half? I don't even know. I don't know what a meme stock is. So I was told last week that the quantum computing stocks are the new meme stocks, and they are super tiny. These are companies with effectively no market cap. So so let's say the whole phenomenon though, between crypto and these tiny meme stocks, let's say like all of it adds up to what I say, 4 trillion plus 10 billion. I mean, I guess it would qualify as a bubble if this were 1997, but in the context of the global economy and global market cap, it's not there yet, and that's why I say foothills.
Yeah, I mean, in 2018 there was a crypto bubble, not as big in billions, but it really had nothing to do with the American stock market. And we've also seen like these Chinese bubble. We saw one in 2018 and 2015. They're kind of like off in the corner, doing their own bizarre thing, growing and bursting. Right. But I do kind of think that as crypto and Bitcoin are becoming mainstream, they keep having these bubbles, and as they get bigger, they're starting to intersect with the real world, where that would be my concern. Like, I don't really care there was a crypto bubble in 2018, but if crypto collapsed today, I would expect it would impact the stock market, at least some crypto-related stocks. I mean, there's more crypto-related stocks. There's stocks that are announcing that they're buying Bitcoin as Bitcoin treasury. So I would say it's infecting our stock market, or it's like a contagion of crypto. There, in addition to meme stocks, there's crypto adjacent stocks.
Yeah, MicroStrategy being obviously the most well known. Several others: Riot Blockchain, Mara, bunch of ETFs. I guess what I would ask you is, do you think we're now at the point where crypto investing has or crypto assets have become so financialized that they are effectively systemically important, or the dollar amount's not there yet? And specifically, I guess I would think of like stable coins, which Tether has long been looked at as, how do we really know what's going on there? Well, what's going on there is now they make a lot of money because they own a lot of bonds.
Yeah.
Is that now a systemically important pool of capital for not just crypto, but for all of us? So these are like the new questions we need to ask as this asset class grows in size.
Okay, so there's kind of like two things. One is, in 1999, we had a huge tech stock bubble. The tech stocks went up, tech stocks that went down. There was no like global financial collapse. Why? Because that was 100% equity. That was an equity-based thing. And, heard a lot of people invested in tech stock, but it didn't like cause a global collapse. What is the difference? The difference is debt. My former colleague at the University of Chicago, Doug Diamond, who won the Nobel Prize, has this quote. Let me try to get it right. Financial crises are always and everywhere about short-term debt. So I totally agree with you that the rise of Tether and other stable coins would be a really serious thing. Like, forget about these meme stocks. That's like a sideshow.
Yeah.
If somehow we had a shadow banking crisis, that would be concerning. I don't know if we're there. That's like over my pay grade, but that would definitely, if we had a messed up financial system that was half libertarian and half regulated, that the libertarian part being the crypto, the regulated part being the banking, that's a recipe for disaster right there.
Well, we sort of are in the opening innings of that when we have brokerage accounts that can where you can move money seamlessly between the crypto libertarian type of world,
yes,
and the traditional finance world. And it's not just Robinhood at this point. Now it's Fidelity. And Schwab said right after the election, okay, we're going to do this too. So that's the foothills idea. Like, that's where we're going.
The amazing thing is how many people have changed their mind about Bitcoin. It used to be this terrible thing. Now it's like, hey, we're starting this Bitcoin ETF or whatever. So it's, there's a tendency to join the winning team, and that's what's happening. Having
a kid in college and this being fraternity and sorority bid week, I can tell you right now, the feeling of belonging or not belonging is maybe one of the most primal human urges, and the behavioral, financial, psychology that comes along with those ideas. I almost feel like that's the whole, if you understand how badly people have this like urge to be in the in-group and not on the outskirts of the bonfire where they might fall prey to, a hyena. It's just, it's 100,000 years of human development.
Especially young men. Young men want to form their band that goes out and fights against injustice and, go to the hunt and bring home the prey. So it's kind of like, it's not a bull market. It's a bro market. It's about masculinity. Mark Zuckerberg said it this week. We need more masculinity. And it's a distinctive feature. I guess, it's all part of a cultural moment we're in.
Yeah. Where have all the cowboys gone? They're on their phones. They're trading and sports gambling. All right. Number 2, everyone ought to be rich. You say that's the title of John J. Raskob's spectacularly ill-timed article urging Americans to buy equities in the August 1929 Ladies' Home Journal. I guess the joke there is, like, by the time it's in Ladies' Home Journal, it has now permeated every possible avenue to reach the masses, because that would not be the first place you would see an article about investing appear, at least not 100 years ago.
Yeah, Raskob was he worked for General Motors, and he kind of invented, I'm probably going to say it wrong, but he was part of the whole like installment plan and how to buy a car. He was a legitimate pioneer of household finance, let's say, or consumer finance. But anyway, that this relates back to the crypto libertarianism. It's kind of like we have this, we there's a element of society that's like, there's no way, the whole system is rigged against me. Just working hard will not work. So what I need to do is like take a big risk and go bold with this crypto stuff. So I would say that the crypto has always been part of a utopian vision of starting with the correct premise that we have an inefficient financial system, but then leaping to this like, hey, this Bitcoin thing is going to solve everything. It's going to be everywhere. It's going to transform society, and GDP will go up 1 million times. Yeah.
So when I hear democratizing, all right, let's start with this. We have democratized blank.
Yes.
To me means hold your wallet.
Exactly.
Because nobody in any kind of position of power, any kind of gatekeeper of returns or capital is going out of their way to democratize anything unless there's money to be made. And that doesn't mean anything's wrong with that.
Right.
But instead of leading with, hey, we're doing this because we think it's good for business. No. We're doing this because we have such incredible lives and it's just keeping us up at night that no one else does. And we want to bring you into the club. It's always bullshit. It's never not bullshit. I think it's maybe just a spectrum where it's like a little bit more altruistic and then completely a masquerade. I don't totally hate the message. I just know it's fake.
Yeah, I mean, Josh, this is going to be a boring video because we just agree on everything. But, democratizing sounds good, but not everything should be democratized. Like democratizing surgery. I do not want my surgeon elected. I want to pick I want elite surgeons, not the democratic surgeons. So I think it's often been the case that like there have been well-meaning attempts to like we're going to promote financial literacy, and they backfire. It would be like promoting surgical, giving out a scalpel and saying you could do surgery. It's inevitably going to backfire.
There's a well-known paper that looked at the results of promoting financial literacy, and what they noted after looking at actual investor behavior on the heels of this democratization is that it actually ended up promoting overconfidence, and people did worse in the markets, believing that they were now literate. All right, so there's a lot of that. And it's not just in crypto and meme stocks, which obviously it's a big feature of that. We're starting to see that in private equity, private credit. Just this concept of we are liberating you to come into our highly sophisticated market, and now you're part of the gang. In a million ways, we know how that will go wrong. We don't know the timetable. Okay. Number 3, nobody knows anything. This is as famous William Goldman quote.
Yeah, he's the guy who wrote many great Hollywood scripts and many wonderful books. Nobody knows anything was like, no Hollywood executive knows which movie will succeed. That's why they make 1 million Marvel movies, and some of them succeed. So nobody knows anything.
Oh, and here's the full quote. Nobody knows anything. Not one person in the entire motion picture field knows for a certainty what's going to work. Every time out, it's a guess, and if you're lucky, an educated one.
Yeah, so in finance, we have a special version of that called the random walk theory, which says whatever the price is today, that's our best guess for what it'll be tomorrow. So that the whole theory is it is impossible, it's utterly impossible to predict financial outcomes. And people often criticize finance professors for you failed to predict the global financial crisis or whatever. Well, we have a theory that says it's impossible to predict financial outcomes because people are trying to anticipate it today, and the expectations are already embedded in today's prices. So anyway, the main point of nobody knows anything is we're all existing in a total fog of war here in finance. And that's a situation which gives rise to charlatans who claim to know something but don't know anything. So it's kind of I know I don't sound very humble, but I think we should be humble in the face of market prices. So if Bitcoin is at $100,000 now, I should humbly say, even if I think it's worth zero, it's not, I don't think it's the best prediction to say it's going to go to zero tomorrow. So nobody knows anything is we live in such uncertainty that it's hard to evaluate people making crazy claims. When people make crazy claims, it sounds right, so we go with it.
One of the most helpful things I ever heard a traditional finance person say about the price of Bitcoin, and he had no, I think he might have had a target, but he admitted the target was made up. But William Miller is one of the greatest all-time equity fund managers, and also had some of the most notable blowups. But his comment probably 10 years ago now on Bitcoin is the supply is only going to rise by 1 or 2% a year. So do you think demand will rise more or less than 1 or 2% a year? And if the answer is demand will rise more, then it's an investable asset. The one thing we know for certain, or we think we know for certain, is that there is a finite supply of this, which I like better than .com IPOs, of which there can be an endless amount. My trouble with that is always, well, somebody will do Bitcoin 2 and Bitcoin 3. That's obviously not been correct. We've got all types of cryptocurrencies, but none of them have attained anywhere near the network effects of this one. But is that kind of what you're saying? Is that like you can have predictions and you can kind of have theories, but they should not be stridently held in the face of this fog of war that you describe?
I mean, I think it's a little more than that we could, if somebody says, I am sure Bitcoin is going to $13 million, in 10 years, I think we can safely say that person is a charlatan, or maybe is a direct line to God that I don't have. But I mean, you're exactly right about Bitcoin. The genius of Bitcoin is the limited supply. And that is the difference between Bitcoin and Beanie Babies. Beanie Babies were produced by a company that, eventually made a lot of Beanie Babies. Not going to happen with Bitcoin. And you're right that it's a puzzle that people will not accept substitutes for Bitcoin. There's thousands and thousands of alternatives.
Yeah, so far, no substitute. There's also like a kind of, I don't know if it's a Giffen good or a Veblen good aspect to this, where the higher the price goes, the more desirable it is to buy. Which metaphor am I supposed to be using?
It's not a Giffen good. I think that there's a famous quote. It's by the guy who wrote Reminiscences of a Stock Operator. What's his name? Lefebvre. He said,
Edward Lefebvre, writing about Jesse Livermore.
Right. He said, the higher the stock price, the better. That was one of the quotes I didn't put in here, but he was talking about in 1929. And in the South Sea bubble, they specifically designed the South Sea bubble that, like, when the price went up, it benefited the existing shareholders. So it was like everybody had a incentive to be a cheerleader. So I don't think it's a Giffen good. It's not a normal good. Maybe there's a term, I don't know.
Okay, I think it's a Veblen good. Just what I was, at least what a luxury product that has a direct relationship between price and demand, which is the opposite of economic theory.
So it's like Veblen, the more expensive a Lamborghini is, the more people want it. Okay,
it has an upward sloping demand curve, meaning that demand increases as the price increases.
Okay,
so that's what I think this is. All right, I wanted to. Where was I going now? Oh, number 4. A fanatic is someone who can't change his mind and won't change the subject. We don't know who said this. Sometimes Churchill, sometimes Truman, probably neither. But the zealotry in meme stocks, in crypto, in a lot of corners of the tech stock market, it's undeniable. It's getting louder. And they are in ascendance because they've been right. They now are being appointed to government positions. It's a very tough thing if you're on the outside looking in to fight the urge to join the people who look like they're winning. And that reinforces the fanaticism.
Yes. Well, first of all, they're right today. 2 years ago, they were wrong. And we see them as going up and down, but they see them as like linearly, getting ever closer to Bitcoin utopia. One thing we all lived through was COVID, and we all lived through this idea of like there's infections and they come in waves and waves. And that is an idea that is also spreading in economics, that like the best way to understand some social phenomena is like a contagion effect. And it, just like you say, part of it is the bandwagon effect, that when one side is winning, everybody defects to that side. So I do see the dynamics of like contagion or infection or whatever you want to call it, epidemiology working, and it's like spread by social media and other ways of communication. And we've always had rumors in the stock market and fads and stuff, but it seems to be getting bigger, and the magnitude and the speed seems to be going up. Um, I mentioned a paper by Lasse Pedersen where he modeled this, and it was like the fanatics are a key part of this story, because the fanatics are always there. It's like a disease reservoir. It's always reinfecting the population. When new people enter the population, they get reinfected.
Yeah. Fanatical optimists play an important role in generating mispricing. They continually transmit their bullish message, operating as influencers or thought leaders whose ideas spread through the information ecosystem. So, to your point, they're not going away. They get more or less attention based on the recency of how right they look, but they never exactly disappear.
Yeah,
But there's this phenomenon also where after a huge drawdown, and I think Bitcoin has been cut in half five times in 10 years or something, after a huge drawdown and then the subsequent comeback, which, by the way, these events seem to be happening at a quickening pace, it emboldens them even more. I told you it would be volatile, and I told you to buy the dip. And, so there's a lot of power amongst the loudest of the fanatics.
Yeah, I mean, the power of human beings to justify and rationalize events to fit their worldview is amazing. It's like these doomsday cults where the guy predicts that doomsday will happen and it doesn't happen. He's like, oh, I just miscalculated. It's going to happen next year. And some people leave when that happened, but other people like double up. They're like committed to this idea.
Yeah.
So yeah, but again, I'm looking stupid today because I think Bitcoin's worthless. They're looking like geniuses.
Yeah. So say they put a date that's 20 years in the future, and it's a random Tuesday. The date comes and goes, and these people that have been living with them on the compound for 20 years. So then Tuesday goes into Wednesday, nothing happened. The guy turns around and he says, well, that's because we weren't worthy.
Yeah,
we were all supposed to ascend to heaven, but you haven't been listening to me.
Yeah. If only you believed Bitcoin more, it would go up. Yeah.
All right. 5, the more confusion, the better. Why is crypto? This is you. Why is crypto good? What's the use case for Bitcoin? These are simple questions, but they do not have simple answers. And the answers provided seem to change every year. Okay, so there's a lot of mission creep. This used to be about banking the unbanked, LOL. All of the money in crypto is held by rich people or people who have recently gotten rich. I don't see a lot of soup kitchens that have been transformed into Peter Lugers as a result of Bitcoin. I don't really hear a lot of stories about people whose lives have changed. However, the kernel of truth is there were a lot of lower income people who, because of social media, were infected and bought Bitcoin at $1,500, $2,000, $3,000. You can't deny that this has absolutely changed their lives. I don't know how many of them there are, but I do know they exist.
Okay, so gambling is always, some people always benefit from gambling, while the majority of people, and it certainly changes their life, usually for the better when they win. Yeah. The original quote, "More confusion, the better," is from this guy from the South Sea Bubble. So I would say part of the success of Bitcoin is that people just don't understand it, and they think it's cool because they don't understand it. And Bob Shiller has talked about the mystique of Bitcoin, the mathematical mystique of Bitcoin. I think part of it is, I don't know what your experience is, but if you've ever taken a money and banking course, I took one in college, it is the most boring thing in the world. Like money and banking has an impenetrable wall of boredom protecting you from understanding it, like fractional reserve, interest on deposits to Fed. It's just boring. So Bitcoin is exciting. There's like a hero, there's a villain. You're fighting as part of this thing, and
yeah, it's a video game.
Yeah, it's exactly like a video game. Bing, 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 number go up, and there's a villain, which is the evil fiat currency people who are trying to put
Right.
down Bitcoin. Yeah,
The regulators lately who are trying to stop us from making money. Okay. But there is this aspect to a lot of areas in finance, and crypto is one of them, where that flexibility of convictions about what the thing is even for or how it
yes,
works
yes.
is a really powerful recruiting tool because it could be anything to anyone.
Right.
So
And
you
there's no accountability. They keep saying, okay, Bitcoin is going to provide this free Wi-Fi to everybody, or there are these games that you play, and that
play
there's a
to earn.
cryptocurrency associated with it,
Yeah.
and these projects all collapsed because they weren't good ideas, and we're on to the next justification of Bitcoin, the next use case.
Yeah. One of the things about the movie Dumb Money, they they do a really good, it's not a great movie, but they do a really good job in the movie showing the transmission of how the first people buying GameStop and AMC because of the short squeeze, they kind of like understand the concept of why it should work. But then they show that like game of telephone as they
Yeah.
tell their friends and then their friends tell their friends. By the fourth generation of people hearing about it, they have no idea how short selling works or what any of it means. What they've picked up on, though, is that everyone else is doing it. I
Yes.
So I don't think the people who just put $50,000 into the BlackRock Bitcoin ETF for the first time last week have read the white paper, the Satoshi
No.
white paper. Okay.
But
All
I
right.
mean, in their defense, I drive a car. I don't know how it works. I use a computer,
Totally
and
agree.
it's part of a dealing with uncertainty. We do it all the time in modern society. It's just that the types of things that are sneaking in are getting more absurd.
Okay, we got two more. Number go up. This is you. You don't need to tell me that the number go up captures a central dynamic in financial markets. You can call it extrapolation, FOMO, or as I've previously suggested, the iron law of return chasing flows. Money chases trailing returns. We both, I don't know if you know, I know Zeke, the author of the book, great reporter, really funny guy. The book is hilarious. Isn't number go up though in the end like the only thing? And when it stops going up, then there might be consequences. But it's been going up all year, and people really aren't paying attention to anything other than that, I think.
Yeah, yeah. I mean, everybody in the asset management business knows number go up is what you want. That's what gets you clients. That's what gets you customers. That's what gets you
Yeah.
inflows. And the question is like how long can number go up, and what makes number stop going up? So there are many things that could make the number stop going up. And I don't know if I'm saying that English correctly. The last time around, I guess it was FTX and SBF and the revelation of fraud. That's often part of bubbles. It was part of the South Sea bubble and other bubbles that people are that some of the agents out there are not honest.
Yeah.
But yeah, number go up. I would say that in our brains, there's two things going on. There's value and momentum, and they're fighting with each other. Because when something gets more, it's kind of like what you were saying about your Devlin good. When the Lamborghini gets more expensive, well, I have less money. I don't want to buy it. But maybe as it gets more expensive, I think it's going to go up even more. So it's like value and momentum are at war, and number go up is the momentum part.
I think probably nothing really puts an end to this now from a regulatory perspective. Like I don't think an SBF at this point can do the damage that he was able to do 3 years ago because of how institutional this market has now become. So FTX was important in a world where Fidelity couldn't be a broker, but Fidelity can be a broker here. And these assets are trading on the CME as options contracts. So it's, for me, I feel like you kind of need an economic event where people need the money. That I'm not saying it can't stop going up. I'm just saying, like, how does it have a long-term decline? Is people need to live on the money and can't afford to use it to speculate. A lot of people. So we haven't seen that yet.
Yes.
People forget, for the last 15 years, we've only been in recession for 2 months. April and May of 2020. And it was man-made. We actually have not had a business cycles in the post great financial crisis period. That's the entirety of crypto's existence. Show me what Bitcoin does in a recession. You can't. We haven't had one. So to me, that's the risk here. It's another financial asset, and people live on their financial assets when times are tough. All right, last one. This time it's different. Full quotation from Sir John Templeton. The investor who says this time is different, when in fact it's virtually a repeat of an earlier situation, has uttered among the foremost costly words in the annal of investing. Of course, the well-known corollary is that to some extent it's always different. But I still think that's a meaningful quote, because the markets change, the securities in question change, the political situation changes, but the constant is fear and greed. It's the core of human behavior, is stemming from those two ideas. So I think that's what you're getting at here as well.
Yeah, I mean, it's kind of the same as number go up. Like we see this thing where the price goes up, it goes up more, it attracts more people, it goes up again. There's this whole psychology of bubble beliefs that build, and we've seen it so many times. Yeah, I don't really know how the fear is like when it ends, but the greed is there. Yeah.
Yeah. And you point out Charles Mackay, who wrote The Extraordinary Popular Delusions and the Madness of Crowds, which is a book about historical bubbles, arguably the text on financial bubbles.
Yeah.
He himself fell victim to the British railway bubble, and blew himself up.
Yeah. So first of all, that book that he wrote is not reliable, is widely criticized for just making up stories and repeating nonsense. But it is pretty cool that he was all huffy about it in that quote. It's like, well, if you're stupid, you think that it's repeating itself. But actually, the railway bubble is different. And he had a point. Like the railway bubble was a real thing, unlike the tulips that, really generated profits and stuff. So again, this goes back to rationalization. People are always rationalizing what they're doing, and they're able to come up with stories that explains why they're bullish.
We're very good at that. All right, we'll leave it there. Owen, I want to thank you so much for the writing that you do and the research, and appreciate you coming on. Where can people find more of your market commentary and make sure they get that delivered to them when you write?
It's on the Acadian Asset Management website. It's it's called Owenomics, and you can sign up and get it emailed to you when it comes out.
All right, Owen Lamont, ladies and gentlemen, make sure to check out Acadian-asset.com, and you can find Owenomics and all sorts of other good stuff. Thanks so much for joining us. We'll talk to you soon.
Great, thanks.